Welcome back, everyone. Today I'm going to be talking about why I'm buying a large position in a Class A office building portfolio. I believe it's the best stock in my portfolio that will triple in stock price. It's over 93% rented, and the stock has a price-to-book value of triple of what it's currently trading at, with a recently brought back 7.5% dividend distribution while you wait for it to go back up. And the distribution will probably go up in the future too. The stock is currently trading at around $9 a share, and I believe it will go to at least $28 a share based on their financial portfolio. And a few years ago, it was trading at $45 a share. In late 2023, with rising interest rates, they cut the dividend distribution, which caused the price to fall, but with the rapidly falling interest rates in Canada, they brought it back while still having a 41% after funds from operations payout ratio, which can be used to fund an aggressive share buyback and pay down debt. It's an incredible deal, and they are refinancing these buildings at under 5% interest. A lot of analysts have missed it because it only has a market cap of $130 million for 39 office buildings, with a third of those buildings in the Greater Toronto area, even though the buildings are currently appraised at about $1.2 billion. You're getting Class A office buildings in Toronto and Victoria, BC at an average of $200 a square foot, and 3/4 of those tenants are government agencies or interest grade organizations. These are the kind of tenants who pay on time and stick around. This gives True North a reliable, recession-resistant income stream, and many other office REITs can only envy. And those 39 office buildings have over 40.5 million square feet of gross leasable area across Canada. These aren't speculative properties, they're long-term lease spaces that are trading at a huge discount to what they're worth. And you could not build these buildings for that price. To put this into perspective, there are newly built condo towers in Toronto that are selling for over $1,000 a square foot. So in this video, I'm going to review some of their buildings, go through their tenants, review their financials, and then talk about who the CEO, Dan Drimler, is and why I think he's going to get the stock to at least $28 a share. And don't forget to leave a comment below on the price you think it's going to reach. And as a disclaimer, I'm not a financial advisor. I'm just telling you why I took a large position in this stock. I was a real estate agent a long time ago and spent most of my life in real estate as a real estate investor. But don't just blindly buy it because I'm buying it. After watching this video, do your own research and then decide if it's right for you. I have a large position in it, and I believe this stock will triple in price, not because of the historical cost of $45 a share, but because their current reports say it's trading for a third of their book value. And by the way, most brokerages will let Americans trade on the Toronto Stock Exchange by filling out a few online declarations. I trade on the New York Stock Exchange from a Canadian account, and all I had to do was fill out a few online declarations. Evaluating a real estate investment trust is different from evaluating a company like Lululemon. So I'm not going to fully use my 10 principal value approach like I did with my other stock evaluations. So let's review some of their 39 office buildings that they have. So look at this. Beautiful glass buildings. This one's in Mississauga, another in Markham here. Here we have Richmond Hill, beautiful glass building here. Some of the Calgary properties, Pickering, Victoria, BC. Those are expensive properties. You got Ottawa. Here you got another one from Victoria, BC. Another one in Toronto. Look at this, Halifax, Nova Scotia, Richmond Hill. You got ones right in Toronto, like 5775 Yonge Street. Beautiful glass building there. Another at 3650 Victoria Park Avenue. These are huge buildings, like this one on Yonge, 274,000 square feet. Like, this is just an amazing portfolio to be part of when you own stock in it. So, and these buildings are worth a lot. Like, just look at this. 101 McNabb in Markham, Ontario. That's 315,400 square feet. So let's view the property. TNT bought it in 2019 for $90 million from Crown Realty Partners that owned it for 5 years. It has two major anchors, GM Tech Department and TD Bank's Claim Insurance Department. It is 315,000 square feet with a huge parcel of 29.1 acres. Not too far from here is 3600 Steeles Ave, Markham. IBM sold this surplus office property last year to Triple Properties, which was half the square footage of 156,000 square feet on only 3.5 acres of land for $115 million. So the McNabb property is worth at least double, if not triple, based on recent comparable sales. So let's do the calculation on the IBM building. 115 million divided by 156,000 square feet is 737. So let's have a look at some of their other buildings here. So let's look at this beautiful glass building here, 6925 Century Avenue. Located adjacent to the 401, the busiest highway in the GTA in Mississauga on 7.24 acres. That's close to Toronto's Pearson Airport. It's 252,000 square feet. It's fully rented with 929 parking spots, including 68 underground spots. It was built in 2012 and they bought it for $87.5 million back in 2019. In other words, they bought it for $350 a square foot, and the stock is trading at $200 a square foot. And remember, the surplus IBM building in Markham sold for $737 a square foot recently. I could go on, but this is really impressive. So let's check out their high quality tenant base. So it says True North's top 20 tenants account for approximately 68% of its revenues, include mainly government and credit rated tenants. So 40% government tenants, 34% credit rated tenants equals 74% total rated government and credit rated tenants. So look at this. Federal Government of Canada, 16.9%. Province of Alberta, 10%. Province of Ontario, 7%. GM, 4%, TD Bank, 3.8%, Province of New Brunswick, 3.2%. Even got Staples here, 2.2%, Intact Insurance, one of the largest insurance providers in Canada, 2.4%. You have the Province of BC, 2.5%, Stantec Consulting, 1.6%, Paymentus, 1.5%, ADP, also well known, 1.4%, Abbott Laboratories, 0.5%. So you have a very solid tenant base, which shows this is a very solid company, and I really see this stock going up 3 times what it's worth today. So let's briefly go over the financial statements here so you can see why I think this is an amazing company and how I arrive at this stock price. So notice here, market cap, $126 million, right? So we go to financials and look up balance sheet and look at this. Total assets, $1.2 billion, right? And then you look at the long-term debt, it's over $700 million, and total liabilities, $815 million. But look, there's a difference of about $400 million from total assets to total liabilities. Yet the market cap is just under $130 million. So look at here, $126 million. So if you multiply this, $126 million by 3, you've got about $378 million. That's under $400 million. So you can see how it's worth over $28 a share. It's right there. And another thing I want to point out, so I like you guys to examine this for yourselves. Don't just base it off of what I say. So if you go here, Total revenue, $121 million. And then you see net income is negative 30 million. But if you look at asset write-down here, 47.22. Now, the reason there's an asset write-down is because under IFRS reporting rules, you have to appraise all your buildings at the current market values. So they have property located in areas like Calgary, which has a depressed market, and that's what's causing this asset write-down. These are non-cash losses. So the net income, they're not losing 30 million in cash. It's a non-cash loss because the buildings have been reappraised. So you got to write that down. And another thing I want to show you here from the financial statements is, look at this. Shares outstanding, 16 million to 14 million shares. So that's the share buyback they're doing. And then dividend yield 7.66%. So they're paying you over 7.5% dividend while you're waiting for that share to triple in price. What better deal can you get than that? I just love this. That's why I have a large position in this company. Let's go over the Q2 presentation here. So if you look at the Q2 presentation from their website, you see after funds from operations diluted, 42%. So that leaves you with a lot of money to do share buybacks. And here, if you look at it, they'll tell you their occupancy of their buildings. So Alberta, 87.8%, which is still really high for Alberta. Overall, they don't have such a high rental rate in Alberta. Ontario, almost 95% rented in Ontario. Who is CEO Dan Drimler? Well, he has a BA from Western University and an MBA from European University. He is the founder and CEO of both True North REIT and Starlight. Starlight is the largest residential landlord in Canada with over 70,000 apartments. It says in his recent quarterly report that over the last 10 years, Mr. Drimler has completed over $50 billion worth of acquisitions and dispositions in multifamily and commercial real estate. I think he's well qualified to run this company and to bring the stock price back up. Instead of being paid a salary, Starlight receives management fees. Starlight is the largest private residential REIT he owns. TNT REIT is a pure office building play. For the year ended December 2024, the REIT disclosed that Starlight earned management fees of approximately $4.5 million pursuant to the asset management agreement and was paid approximately $184,000 in other expenses. Second, how much insider ownership is there? In 2020, Drimler held 8% of the total shares, which means he paid a lot more for the shares than they are trading at today. And he has been buying a lot of shares since then. He currently owns 11.8% of the company, approximately 1.646 million units. And he is also chairman of Northview Apartment REIT, of which he owns 15.42%. When you evaluate a company, you always need to look at insider ownership before deciding whether a company on the dip is going to see their stock price go back up. As the CEO is a major insider who has been buying up a lot of the stock, this shows he has skin in the game and believes the future of the company and will do what needs to be done to get the price of the shares to go up because it personally affects him. In addition to the CEO buying back shares, they're also running an aggressive share buyback program. In 2023, they repurchased 815,000 units for $8.29 million. In 2024, they repurchased 784,000 units for $7.2 million. Currently, they have a market cap of $130 million. So those are some really big yearly share buyback numbers. All right, let's wrap this up. Today we talked about why I've taken a large position in True North Commercial REIT, a portfolio of at least 39 Class A office buildings across Canada that's currently trading at 1/3 of its book value. We went over their 93% occupancy rate, the quality of their tenants, and many of them government and investment grade organizations, and their restored 7.5% dividend that's well covered by funds from operations. We also discussed the refinancing under 5%, along with the properties being appraised at $1.2 billion, leaving a lot of equity for the share to grow to $28 a share. Plus, with further falling interest rates in Canada, such as a current reduction of the Bank of Canada rate by 0.25% to 2.5%, and a disciplined management team led by CEO Dan Drumler, I believe this REIT has all the right conditions to recover strongly, potentially to at least $28 a share. So in my opinion, this is one of the most overlooked and undervalued value investing plays on the Toronto Stock Exchange right now. If you found this breakdown helpful, don't forget to hit like and subscribe and leave a comment below with your thoughts. Do you think True North can hit $28 a share target or even higher? Let me know in the comments below. And thanks for watching, and I'll see you in the next video.